down day, Carol Massar, but as Alix was alluding to a little bit earlier on TV here, it could have been a lot worse.
Yeah, it could have been a lot worse, especially if you look at some of the automakers, right? You would have thought, wow. I mean, the sector, depending on how you look at it, auto parts versus automakers, foreign automakers, but Ford and GM right now taking it really on the chin here. Ford is down, about 3.6%, and GM down about 7%.
Okay, so the S&P 500 is down about 0.3%. It's moved between gains and losses at least a dozen times today. It kind of masks some of the bigger moves that are taking place underneath, whether it's a Dollar Tree going up by 11% or a GM down by more than 7%.
It also masks the idea that gold continues to rally. I mean, with the advance in gold, it seems to signal a lot more concern, a lot more alarm than what's actually showing up in equity prices.
I love that you said that, because the GDX, which tracks the big gold miners, is at its highest level since January of 2013. It was like a whole different world for gold. So within the equity market, there is still a little safety rotation.
Yeah, absolutely. And you saw that reflected also in some of the moves that we saw in the Treasury space. And we were having a conversation on television a little bit earlier with PIMCO's head of leverage finance here. He's still seeing a lot of opportunity when it comes to high yield debt, junk bonds, as well as leveraged loans here. We get the closing bells in New York on this.
Thursday.
What is it? Thursday afternoon?
Friday Eve, guys. It's Friday
Eve. You sound tired, too.
On this Thursday afternoon here, the bell's being rung. Actually, look at that. Dow Jones ringing the bell there. Well, that's appropriate. The Dow Jones Industrial Average closing lower on the day by about 160 points, or about 0.4%. The S&P down about 19 points, below 5,700, or about 0.3%. The Nasdaq Composite down about 0.5% on the day. Your big decliners on the day, though, were in that mid-cap space. S&P 400 mid-caps are down 0.7%, and as far as the Russell 2000, that's lower by 0.4%.
All right, once again, a day where we're kind of getting a little bit of an even split here on the S&P 500, although I don't know what's going on. I'm a little sleepy, and I think my terminal's a little sleepy. I can't bring up the numbers, but it's about an even split here in terms of gainers and decliners.
Yeah, 286 down, 214 up.
Thank you for that.
All right, let's take a look at the IMAP, and that lopsided move towards decliners shows up here in the IMAP. You do have three sectors in the green. There are some of the smaller ones, consumer staples and healthcare. Staples is really the big winner here, up 1%. Consumer discretionary, little change, but somewhat higher, and that is because of a gain in Tesla. Energy, communication services, and tech are the big laggards of the day.
All right, guys, let's get to some of the individual gainers. Petco, definitely on that list. Love the ticker, woof. Stock up about 31% here at the close. First quarter earnings forecast topping expectations. Company closing underperforming stores. We know some of their story there. Analysts were pretty positive on the firm's focus on profits over sales. I will point out, though, you did have some analysts cutting their price targets on the stock, but nonetheless, investors kind of liking it today. I will also point out stock's down about 10% for the year, and about 40% of the float is shorted. So
you have a dog, right? A pet?
I have 2 dogs.
Oh, wow.
Yeah.
So, okay.
Yeah, I'm spending lots of money.
Back to that discussion yesterday, Romaine, about how this is a staple, not a discretionary expense.
I know. I mean, I don't know if I know you watch our show religiously, Carol Massar, but Scarlet and I interviewed the CFO of Rover, who made it clear that pet parents, as he says, are going to keep spending. By the way, put your dog in the will, of course, he says.
Listen, what is the dog going to do?
Yeah, no, that's my wife said last night, too.
Put him where?
No,
in the will. In your will.
He wants to make sure the dog is just as well set up for success as his kids.
Stranger things have happened.
All I know is I want to come back as my dog in my next life. I'm just going to put that out there.
Living the life there.
Yeah, exactly.
I wonder what she's doing right now.
Dollar
She's laying on the bed, on the floor.
She's not concerned about tariffs.
Laying on the down comforter, totally. All right, Dollar Tree, down, actually up about 11%. I'm doing gainers. Where am I? All right, rolling for a second day.
Don't interrupt her.
I am exhausted right now. I feel like I need a cup of coffee. Dollar Tree up about 11% here, 2 days in a row. Top gainer in the S&P 500. We did have Evercore ISI coming out, raising the firm's price target on Dollar Tree to 85 from 79 a share. Stock closing just below $77 a share. So that was at play. We know the story. The company announced the much anticipated sale of its Family Dollar business. So anyway, a little analyst movement there. Avis Budget, we talked about the car companies, right, under pressure.
Yeah, this was amazing.
Avis Budget up about 18%.
Yeah.
Hertz also rallying big time in today's session on those planned 25% tariffs from the president on autos. So basically the thinking is our own Steve Mann weighing in, new vehicle prices, if they go up, the used vehicles the companies sell become more attractive. So that's kind of some of the reasoning there. So a lot of movement there. And one more, I know I'm only supposed to do 3, but What can I tell you? It's that kind of day for me. Up about 2%.
She's never going to stop.
I know. It was a top gainer in the NASDAQ 100. Thinking is Tesla, because they make a lot of they produce here in the United States, that they're going to be okay. Although they do import some parts from overseas. I am done.
You're done?
Metaphorically.
Okay.
Sorry. Yeah,
All right.
I am. Thank
Let's
you.
do some more on autos. General Motors down 7.4%. U.S. automakers fell after, well, not Tesla and Rivian, I should say, after the president hit auto imports with a 25% tariff starting next week. It's hitting Detroit. It's not just hitting international automakers, as we heard earlier from our man in Detroit. On this day, Keith Naughton, who was really talking about how even though Mary Barra and the chairman of Ford were in Washington, D.C. trying to make their case, they're still obviously very, very concerned about what this looks like. Anything can happen over the next month, but as of now, it looks like these tariffs will go into effect. AMD shares fell 3.2% today. This after Jefferies downgraded it to hold. Jefferies said that AMD is falling further behind when it comes to its tech, behind NVIDIA when it comes to its tech, which could continue to pressure the stock. Shares of AMD have fallen about 50% from a peak about a year ago. At least 8 firms have lowered their view on the company this year. And finally, a late day addition is AppLovin, a short report came out. Shares fell 21% today. Muddy Waters issued a report against the company. At least it's the third report from a short seller in about a month. This specific report alleges that AppLovin misrepresents the benefits of its AI platform, forces app installations, misappropriates data, and violates the platform's term of service. Should note that the company did previously respond to February reports saying that they were, quote, full of inaccuracies and false assertions. It did rise more than 700% last year. Remember, this was one of the best performing tech stocks. It was also added to the NASDAQ 100 recently as well.
All right, let's get a read on what's going on in the retail space. Lululemon out with its report for this fiscal fourth quarter. The company said that revenue came in at about $3.61 billion. That's a beat. EPS came in at $6.14 a share. The street was looking for $5.85. That's a beat. This is for the quarter that ended at the end of January. Their fiscal first quarter guidance, they're saying that revenue will be $2.34 billion to $2.36 billion. The street on average was looking for $2.39. As for EPS, the company said look for $2.53 to $2.58. The street was looking for $2.78. So the top end of that EPS range that they're giving is below the average of street estimates. You're seeing the shares lower in the after-hours trade.
All right, let's stay on the retail and apparel side because Oxford is another company we're watching. That company reporting results. It owns the trademarks of Tommy Bahama, Lily Pulitzer, Southern Tide, and Duckhead Lifestyle.
What?
And yeah, that's right. The company reporting fourth quarter adjusted EPS beating analyst estimates, $1.37, 10 cents better than what analysts had anticipated. But for the outlook for this quarter, that does come in later than expected. First quarter net sales will be at most $395 million. Analysts were looking for something north of $402 million. And first quarter adjusted EPS will be at most $1.90, long way off from the consensus estimate of $2.73. Nevertheless, Oxford raising its dividend, so that stock may be paring some of its or limiting some of its losses as a result of that increased dividend.
All right, guys, going back to where equities and where assets settled for today, I'm taking a look at the bond market. So no surprise, as you saw a little bit of risk off in the morning, you saw a little bit of bid in that front end. But honestly, it was a very calm curve. You do see that 2-year yield now below that 4% level. We had the final 7-year auction later today. It was all right. I mean, it wasn't great. It wasn't terrible. It was just okay. But there you are, a little lower yields. The belly not really doing that much, guys. It's surprising how calm it feels the bond market has been.
Yeah, really interesting. I just want to go back to Lululemon for a moment, just looking at the release. Megan Frank, the chief financial officer, talking about another solid year of performance and so on and so forth, but says we look forward to building on our growth in 2025 while remaining agile as we navigate ongoing macro uncertainties. You know, it's going to be super, super important as we start to get into the next earnings season, what CEOs, CFOs, they all say about the outlook. I feel like I've heard the word uncertainty a million times this week alone because people just don't know what's coming at them next, certainly those who run companies.
Absolutely. Carol?
Oh, am I supposed to finish?
Yeah, we're actually done. Yeah.
And back to you, Carol.
Almost Friday. All right, guys, that is a wrap. Our cross-platform. Thanks for putting up with me.